The Fed held rates and promised three rate cuts this year, but there was a bit of hesitation going into the close on Friday on whether the market can maintain these levels. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our Elite webinar. Now, if you are joining us for the first time and watching this on YouTube and you haven't done so, do me a favor and get down there and hit that like and subscribe button. Click the bell icon next to it to get notified every time we upload a new video here on the Riz Elite channel, because you are not going to want to miss any of these webinars going into the next few months. So let's take a look here at what happened this week. We had a rate hold as expected. The Fed did not increase or decrease interest rates, and basically said that, yeah, we're planning on doing three rate cuts this year. Isn't that awesome? We are just so excited about that, and the market reacted. Now, obviously, we had a very strong push from Tuesday to Wednesday. Thursday had a massive gap up, somewhat catapulted by Micron earnings, as well as just overall euphoria from what the Fed was saying. But we definitely did not continue the rally. After opening up higher on Thursday, we definitely saw some profit taking going into Thursday and Friday. Nothing massive, but enough to make the market looks like it's wanting to curl over a little bit here after we hit an all-time high on Thursday at 5261.10. So, the Fed has promised that they're still going to do three rate cuts this year, but I want you to think about this for a second. CPI inflation data has increased for the 2 straight months. So we have had 2 months in a row with hotter than expected CPI data, so inflation data. So, it's like the meme, right, where the dog's sitting there drinking coffee and saying everything's fine while the whole house is burning around him. It's kind of like that, because that's what Fed's saying. It's like, hey, everything's fine. Inflation's going up, but don't worry about it. We're going to cut rates 3 times this year. I'll believe it when I see it. That's all I'm going to say. Now, maybe they will, but the thing is, basically, we are now at double the target 2% target rate for the CPI. They want the Powell and the Fed has said multiple times that they want inflation around 2%. We are pretty close to 4% at this point. So 2 does not equal 4. I know that math on stream is hard, but I'm pretty confident that that one is correct. So they say they're going to cut rates, but can they really? If inflation keeps coming in hot like this, even if it's just kind of melting upwards, it's still going up. So that's something that we need to keep an eye on. The PPI, which is the producer price index, inflation jumped to 1.6%, which was the biggest increase in 6 months. And core inflation, or super core inflation rather, is at 6.3% on a 3-month annualized basis. So basically, we're seeing inflation go up, and that's kind of what the Fed is trying to prevent, but yet they're saying, hey, don't worry about it. We're going to cut rates. So there's definitely a disconnect there, and that's kind of what I wanted to draw your attention to here with this rally in the market. Everybody's like, listen to what Powell had to say and like, oh yeah, it's great, awesome, let's buy everything, risk off. And then it's like, hold on a second, maybe let's take some profits here. As you can see, we are approaching that overbought area on the S&P 500. So don't be surprised if we do have a small to moderate pullback sometime this week. That would make sense after this massive rally going into Friday. But can we maintain this 5,200 level? So far, we have. Obviously, we had a big push through it on Wednesday, a very bullish push, but definitely some hesitation here at the top. So if you do have profitable positions, do make sure you are keeping an eye on those to make sure that you don't let a green trade go into the red because you wanted to hold too long and try and get more and more and more. Sometimes just taking your money and saying, hey, I won that one is good enough. Let's take a look here at the breakdown for the S&P 500. So as I alluded to earlier, Micron earnings this week really kind of helped push the market up on Thursday. And, we kind of see that nice push up here going from Wednesday into Thursday, and then just kind of holding here. Communications being the top dog right now, up 13.25%, followed by tech at just a hair short of 12% up on the year, which is right behind the S&P 500 itself, represented here by the SPY index at plus 10.39%. Excuse me, the SPY ETF. Financials and energy doing great, both plus 9% on the year, still underperforming compared to the S&P 500. Also, we're seeing healthcare, consumer staples, and consumer discretionary doing very well, all above the zero line, while utilities and real estate are both below the zero line here. Utilities kind of holding steady, doing a little bit of a consolidation move here, going through this week, while real estate getting a bit of a downturn going into Friday. So we're definitely keeping an eye on that. Rather, we're still seeing this disparity between communications and tech and the rest of the market sectors, as they are represented here in the S&P 500. Let's take a look here at the breakdown for the asset classes. I don't know about you, but gas is running about 300 or 300. That would be good. If it was 300, we'd be in bad shape. $3.50 per gallon in my area. And you can see that here with the oil, the price of oil continuing to move in this slow upward, direction. We're in a very nice uptrend on oil, making a nice move here. Let's see, where did we close on Friday? Looks like we closed at $80.63 per barrel for light crude. So, still seeing this nice melting upward of oil. If you were able to get in on that long, congratulations, you should be doing okay. If not, it doesn't seem like a buy location to me. I would just continue to watch it, but that's just my opinion. Gold, after its parabolic move, has really started to consolidate, and we kind of talked about this last week. We made this push to an all-time high. We made another push here. It looks like on Wednesday at $2,185.80 per ounce for gold, but then a very sharp pullback on Thursday and Friday. So we are starting to see that consolidation here, like we talked about, kind of like that up and down movement, basically sideways. That's a little exaggerated, but I'm just trying to make a point. And where gold goes from here will depend, a lot on different things. Now, from what I understand, there was a lot of central bank buying of gold here, which makes sense. That is pretty much the only thing that is going to move gold this much. I do not think the retail investors are going to be able to move the price of gold that much. But basically, central banks around the world are hoarding gold at this point. So that is what is driving the price up. We will see here if they continue to do that, or if they start to take some profits and, people start to sell here at these near record all-time highs. Let's take a look here at the breakdown for the bond yields and the U.S. dollar. U.S. dollar making a nice move up here after last week, or 2 weeks ago, excuse me. So making a very nice prominent push back up here towards this 104 area. The bond yields are still kind of digesting what Powell is talking about here, saying that there's going to be 3 rate cuts. But yeah, again, I'll believe it when I see it. That's all I'm going to say. I think it's a lot of talk, a lot of, oh yeah, we're going to do it. We're going to do it. Oh, well, inflation isn't where it could be. I guess we can't do it. So, we still continue to see this nice, separation between the 10 and the 30-year bonds, with the 2-year bonds still being the top dog here. Let's see where yields ended up on Friday. Looks like right around 4.591% yield on that 2-year bond, followed by the 30 at 4.381, and then the 20 at 4.202. So, definitely seeing that inversion there of the 2 and the 30-year bonds still. Let's take a look here at the important dates for the market this week, and we do have a few of them that we're going to be keeping an eye on. As you can see here, nothing on Tuesday too much. It would appear as though I had accidentally picked 2 weeks. So no, actually didn't. It just picked up Monday. So ignore that. That's for next week's webinar. As you can see here, Tuesday, pretty much a nothing burger, durable goods. No one really cares about that. GDP growth rate, quarter on quarter final, that for Q4 finalized. That will be an interesting one, to say the least. People are going to be eyeing on that. But most of it's going to be on Friday. And, it's interesting how they schedule some of these things on Friday, because it gives you the whole weekend to, forget about it. Mostly the Fed Chair Powell's speech. My motto, guys: when Powell talks, the market moves. So keep an eye on Friday going into that speech. That's going to be a big one, I suspect, where, people are going to be getting an idea of the Fed's thoughts on, how the economy is doing and where we're going. Of course, we're also going to see personal spending, personal income, and core PCE is going to be reported as well. So, keep an eye on that. But mostly, in my opinion, the big catalyst on Friday is going to be Powell's speech here at 10:30 Eastern. So keep an eye on that. Don't get shaken out of your positions if you are holding, unless you're ready to get out. And yeah, buckle your safety belts because it is time to rock and roll. All right, so I got a couple of questions here from our elite members. Now, if you are here live on the webinar, please don't hesitate to post your questions. But I got a couple already from my brother Nikhil. So let's take a look here first at Q. It looks okay. Let's see here. All right, so the question is here basically, obviously, we have an election coming up, and uh, let's just say certain people are not trying to kill oil right now, trying to get reelected, and kind of wondering here what this downtrend is. And I would say honestly, we are kind of holding here. I wouldn't say this is really a downtrend. This is more consolidation, if you ask me. So let's take a look here. Where's my lines? Here we go. Horizontal line, that's what I want. So you can kind of see here that we are holding tight right about here around this 191.60 area. That is proving as pretty solid support, but we are also kind of stuck here. Let me make another one right about there in this channel here between 191 and 204. So we are just no, I got you, brother. We got it. So we're really just kind of chopping around here on for Q. So is this a buy or hold? I would say now, if you're holding and you want to see if it makes that move upwards, then I mean, you definitely can continue to hold. If we get somewhere here around like 185, that might be a place to start being a little concerned, or maybe even the 50 moving average here would be something that I would be keeping an eye on if I were holding this stock. Again, that's just me. That should not be construed as financial advice because, well, I'm not a financial advisor. I'm just a dude who knows how to run a Zoom webinar. But we are kind of chopping around here between these two areas. So a strong push in either direction would be a good indicator of what direction this security wants to go. So make sure you're keeping an eye on that. A couple of others, Google and PANW. Let's take a look at PAN. Oops. Typing is hard. Okay, so PANW here looks like post earnings had a huge sell-off. Even though earnings were spectacular, it looks like maybe something like guidance was not as hot as they were hoping for. We kind of got the bounce off of the 200 simple moving average. Really nice bounce, I might add. Ran right into the 50 and sold back off, and now we are consolidating here. So this one looks a little more interesting to me, but is somewhat concerning off this hard rejection of the 50. As you can see. So, really nice hold above the 200 here, just textbook technical, bounce here off the 200 simple moving average. And then a very hardcore rejection here. So right now what we're doing is we're basically just consolidating. And we're going to need to kind of keep an eye on this one going into here. Let's see here. I see Kramer thinks that this is a good one. Okay, well, there we go. Overly punished in 2024. Well, that's definitely. Oh, and I'm seeing wonderful names here from Benzinga. That's a great one. So, just keep an eye on this one. I would say, honestly, they were hit a bit too hard for these earnings results. Obviously, these were really good earnings and revenue. So, yeah, it's one of those things where it looks like it's one of those times where the investor's like, well, it wasn't good enough, right? So earnings weren't good enough. Stock gets punished. They sell. And then it looks like people took the buy the dip option, sold off, and now we're just kind of holding here. So if we can hold over this area here around 277, 270, somewhere in that range, I would be pretty happy to consider this for a hold if that's something that you like to trade. But definitely keep an eye on it because if we break below that 200, that is not good. So definitely keep an eye on that 200 simple moving average and use that as a bit of a guide going in here. All right, we got one more Google Alphabet Incorporated here. So Google, one of Riz's favorites, obviously a very solid performer and, a great stock to hold. Looks like we have been buying pretty hard, mostly off of AI hype, if I had to guess. because that's the buzzword these days. I would not be looking to buy this now. This looks like a chase if I've ever seen one, if you ask me. So, obviously, the time to buy was probably in this area here, but sadly, we may have missed that. If you are still holding and you're profitable, I would definitely consider putting a profit stop to make sure that you lock in those gains. And make sure that you are not, like I said earlier, putting a green trade into the red. That's something we definitely want to avoid, especially in these market conditions. So, but then again, Google, a great company, doing very well on earnings, a mere 86 billion revenue, just pocket change, guys, just pocket change. It's no big deal. But looking very, very good, at this point, even though earnings were good and they did get sold off a bit, came back down here to the 200 and bounced off of it. Very nice. I wouldn't want to be buying it here closer to these highs. That again, that's risky. And expecting it to make a run that high later, it may be a little bit hopeful, let's just say, but in this market, you never know. So if you are long on this one, yeah, for sure, don't let a green trade go red. That's the last thing you want. So make sure if you do have profitable positions right now and you don't have time to keep an eye on your brokerage account all the time, profit stops are a great option. But again, you need to make sure that you know how to set your profit stops appropriately. Make sure you consult with your broker for that, and they can help you if you need help with it. Otherwise, you can set them yourself, and that can protect your profits. Or, if you want, you could always take part of your position off, hold the rest, let it go, and, again, set another profit stop for the remainder of your position just to make sure you lock in those gains. So if you are in those and you're looking green, then good for you. Good on you, Nikhil. But yeah, getting in now, it seems a little bit presumptuous to get in now with this big move here over the last, couple weeks, but you never know. In this market, it is a very bouncy, choppy market with, a lot of euphoria and then a lot of profit taking. So we'll have to see what phase we get this week. I'm not seeing any other questions being posted in the chat. I want to thank all of our elite members for coming out tonight. It is great having you as always. And if you're not an elite member, you need to be. So make sure you check those links down in the description. Make sure you give Riz a follow on Instagram, and we'll see you in the market on Monday.